After earnings now, IT firm Happiest Minds Technology reported its Q2 numbers. The company reported constant currency revenue growth of 2.3% sequentially, while EBITDA margin dipped 120 basis points. Rima caught up with the management of the company and began by asking about the outlook for the second half of the year and the guidance for double-digit revenue growth for the full year. Listen in.
We had guided that we would do double-digit growth for the current year, and I would say that we are on track to meet that goal. Our pipeline at the end of Q2 was much higher than what it was at the beginning of the year, which should contribute to growth in Q3. Now, some of the initiatives that we undertook, transformations that we undertook last year, have started paying dividends. If you look at our NN initiative, where we broke up the NN sales team, the sales team into NN BDMs and EEN BDMs, that's beginning to pay off in terms of the new logos that we've closed. We had 30 new logos in the first half of the year that we expect will contribute to growth in the second half, as well as contribute $50 million over the next 3 to 4 years. GBS was other transformation that we had started, and we have, it's come along really well. We've done $4 million for the first half of the year. We should do our goal of $8 million for the current year. They had broken even last quarter, and they've started showing profitability, so contributing to the bottom line as well. And 22 of the use cases that we have implemented, we realized are replicable sales, which we are taking to other customers as well. And we expect to get another $50 to $60 million from these use cases over the next 3 to 4 years. So not only will they contribute to the growth in the second half of the year and to this year, but we also look at them driving growth for the next 3 to 4 years, based on which we are confidently saying, earlier we had said that we will do double-digit growth for next 3 years. We're increasing that to 4 years now.
Venkat, can you explain the margins? I believe there was a wage hike impact which hurt margins this time. What was the overall contribution and how were you able to offset it? The INR depreciation and other factors.
So to start with, yes, we were one of the very few companies who had given the pay increase effective July of this year. So that has had an impact. We could set off part of that through improved efficiency. Utilization is at an all-time high, or I should say high over the last 3 years of 80.7%. Our attrition is trailing down to 17.4%. Both of them have had a good role to play in margin management. Interestingly, our gross margin for the quarter has gone up to 37.2%, aided of course by help with the way the rupee has moved versus the dollar. So it has been a quarter where we had some benefits, most of which has been plowed back into the business in terms of investments in GBS, business services, and the new sales engine that we have put in place. The new sales engine is beginning to fire. We have assigned 30 new logos with the potential of anywhere between $50 to $60 million in the next couple of years. GBS has not only broken even, they did that last quarter. They're beginning to perform on that same basis, and we are looking to get back to the profitability numbers that the other BUs are showing, or in fact better from that standpoint. So hopefully we should be able to manage the cost increases that we've taken in through efficiency and cost management, and also improvement in profitability of GBS and the new sales engine starting to fire. Obviously, I would not complain if we get some benefits from the exchange rate environment, but that's something which we don't have much control about going forward. But all told, on a margin front, we are hopeful of maintaining the 20% plus EBITDA guidance. Operating margin at 17% plus. We have done 17% this quarter, and YTD 17.2%, which is in the striking range of what we have been planning for, targeting for the year.
Generative AI, you said $8 million in terms of revenues for FY26. And again, just walk us through how the operating profit from here on will improve. You spoke about how it broke even in Q1, but the trajectory to get back to company averages, how long will that take?
Yeah, so that we had said about 18 months. 18 months is what I had said to come back to the same levels of profitability that we had planned for. We are down to 12 months right now after the BU started fully firing, And I would say by the end of the year, they should be at the levels that we have planned for them. But largely then looking at them as an individual BU and the profitability, the ability for that business unit to pull through revenues into our other two units and how they work so closely with the other two business units is what is really that needs a call out. They are really helping, up efficiency, the rates that we are deriving from our customers, the work that we do for the customers on the other two BUs, which is really, I would say, Gen AI-led services. So, if you consider that, I think the payoff is bound to happen by end of the year. The rates that we get for Gen AI services, Gen AI-led services are, significantly higher than the averages that we get for, higher-end services like analytics and even product engineering. So that also will contribute to the way we manage our profitability going forward.
Joseph, you want to elaborate on the point that you are able to command higher rates for generative AI business? Can you put a number to it? How much higher than the overall company average? And even this, pipeline of $50 million in terms of revenues over the next 3 years. How have you arrived at it?
What we're seeing, there's a range on an average, right? If you take average rates, we're seeing something like 20 to 25% higher rates than the rest of the company for GenAI related projects. So that, as Venkat pointed out, that contributes to higher margins as well. So, what we did during Q2 is to look at all the use cases that we had implemented for customers and looked at, how applicable it is within that vertical or across verticals, and then assumed that, if we got X more customers over the next 3 to 4 years, given the revenues that we've got for each of those implementations, what would that turn out to be? Aggregated that, and that's how we came at around $50 to $60 million for these 22 replicable use cases.
Well, that is Happiest Minds for you, and the stock is moving up post this interaction. Basically, the company is saying that double-digit revenue growth for 4 years versus earlier they were confident of achieving it for 3 years. Now they're saying 4 years. And there are two key reasons. One, the generative AI business unit. That, based on what they have right now, they believe can generate revenues of about 50 to 60 million over the next 3 to 4 years. And secondly, they did a lot of reorganization, but they basically got a sales team, dedicated sales team. So the net new logo addition has been very strong. Okay. So that's about 30 in the first half. And that also, when they extrapolate the performance, they're saying that will again, add about 50 to 60 million in the next 3 to 4 years, which is what makes the company confident on Happiest Minds. All right. We will slip into a break on that note. On the other side, we'll focus on the crypto market. Dilip Chinoy from Bharat Web3 Association will join in on the other side.